Hey guys, so thought we'd have a look at the Stellantis half-year results. It's the company everyone seems to love to hate. A lot of the sort of brands that are under this banner don't seem all that popular, so when you combine them all together, it's just a company that no one really gets excited about. But I think they produce some quite nice cars under some of these brands. So yeah, we'll have a look. So this is one of my larger holdings and probably one of my higher conviction holdings, to be honest. Sort of weighing up this against Volkswagen Group at the moment, and it seems to be sort of more positive at the moment. I'm not sure whether this is the market just going up in the last month or whether people have sort of taken the earnings last week fairly well, but yeah, it's certainly been sort of on the up. I was looking to add to the position at some point. So as I say, I don't quite think we've bottomed. So hopefully I'll get another chance to top up. But yeah, 45 billion euro market cap, pretty good. Dividend sort of once a year. I think the dividend is very much sort of subject to change. They're still sort of restructuring the company and spending an awful lot on electrification. So I wouldn't expect that dividend to stay as it is. Could come down or up, to be honest, depending on what they want to do. So they released the H1 2022 results. So this is January to June. Some sort of highlights on there. 88 billion euro revenue, up 17% compared to the first half last year, largely due to putting the prices up on their vehicles and sort of FX translation effects. So dollar sort of strengthening. They incorporate their revenue in euros, so that's been a positive for them. Operating income 12.4 billion, up 44%, which again, sort of I mentioned this earlier in the year, selling sort of less cars and upping the price on them was always going to be sort of a positive for profit, even if it's not particularly positive for sort of fundamentals. You don't want to see shipments reducing, but yeah, we'll see how we go going forward. Net profit of 8 billion euros. That is the big one that I was looking for. So 14 billion last year. Sort of a lot of people, I think, were thinking it was a one-off, and certainly with obviously the war first half of the year and sort of energy issues, was sort of, I guess, people were expecting lower profit. But yeah, annualise that and you're at 16 billion euros. I think they are sort of forecasting slightly worse. They're sort of saying the industry outlook is a little bit down, but sort of company-wise, still seem pretty good. So even if we get a drop down from 8 billion euros, you're still looking at sort of similar to last year, if not more, which I'd be fairly happy with, to be honest. And you've also got the BEV sector, so this is proper electric vehicles, not including hybrids, up 50% year on year to 136,000 vehicles. So that's pretty good, I thought. And a positive there, they now offer 28 battery electric vehicles with an additional 28 to be launched over the next couple of years. So that's pretty good. Most of those EV sales at the moment coming in Europe. The Fiat 500, #1 best-selling vehicle in a battery electric vehicle in Germany and Italy, and the Peugeot E208 best-selling in France. So pretty good. And a lot of the Europe side, I believe, are sort of pushing some of these EVs to be launched over the next 2 years as well. The American side are sort of coming, electric truck from Ram, but yeah, it's so far it's the Europeans sort of leading that push. Yeah, so you've got Dodge, Jeep and Ram want to reveal more very soon about their electrification strategies. So a lot of debate about electric muscle cars and whether people would sort of get on board. People like their sort of big engine petrol muscle cars. Sort of the noise is the big kicker, which electric is not really going to have, other than sort of simulated noise, which I doubt is going to wash too well. But as a trade-off, obviously you get incredible straight line acceleration from the electric. It tends to sort of deliver all the power at once rather than an engine having to wear up. So it's whether they will trade speed for the noise, basically. Here they've split the performance into regions, which is quite good. You've got North America performing pretty well. Shipments up from 873,000 to 959, and revenue again, sort of with the increase in price, up 31%, where shipments were only up 10. So that's pretty good. And operating income up 47%. Obviously, with the price increase, that sort of translates directly into higher profit. And 18% operating income margin now, which is pretty good. And that's the highest of all the regions. Europe not doing quite so well, down 18% on shipments, but pretty much flat on revenue, which again, sort of similar reasons. Profit actually up, operating income actually up 15%, which is very, very good, but only at 10.4% margin. So even in the sort of home countries, if you like, on the Europe side, they're only getting 10.4%, which not quite as good. I guess the truck side and things in North America have some decent margins. Looking at Middle East and Africa and South America as well are sort of getting hit quite hard. I think this is a lot of FX effects and sort of inflation hitting some of these countries pretty hard, but both of them shipments down, South America a little bit more, but revenue up quite strongly. So 19% up in Middle East and Africa, and 47% up in South America. And operating income even more crazy, 91% up in Middle East and 207% up in South America. So they're kind of getting gouged on price at the moment with their poor currency effects. China and Asia Pacific and India, again, not too bad. Slight increase in shipments, and revenues up, and operating income up at 13.4% margin. So pretty good. Obviously, China is sort of the largest electric vehicle economy in the world and is growing faster than a lot of the others. I think they've got around 30% electric vehicles now, so not the best to be quite low on shipments to China or production in China. They've shut down a factory sort of joint venture in China, and that's not gone very well. They've sort of criticised Stellantis, so really do need to sort of find a way to push into China a lot more, but we'll see how they go. And then Maserati seems to be the sort of problem child so far, but not doing too bad. Shipments down, revenues slightly up, and operating income up a hell of a lot. Again, sort of FX transaction effects and just increasing the prices have done quite well. So they're at 6.6% now, where they were at sort of 3.3%, which you do sort of question if it is all worth it at 3.3% adjusted operating margin. That's not net, so could even be a net loss for just Maserati. Obviously, they want to be trying to paint a healthy picture on it, so they do adjusted operating margin with a number of adjustments. But yeah, overall, pretty good. And a quick look at the cash flow and balance sheet statements. So this includes the sort of large capital expenditure figures. You got nearly 5 billion euros last year, and 4.4 billion for the first half of this year from sort of 9.8 billion operating cash flow. They're needing to spend an awful lot of money to electrify the current factories, make them ready for EV production, because it's quite different to combustion engine vehicle production. And then obviously you need factories building the batteries rather than building engines and the sort of components that won't be needed. So yeah, they end up with sort of a lower free cash flow than net profit, 5.3 billion for a half year. Still pretty good at sort of 45 billion euro market cap. Very, very good. And looking at the debt side, debt has come down 5 billion euros, over 5 billion euros since Christmas time, which is very good. And cash has come down not quite so much, so 3.3 billion. So overall, again, a net cash position of 22 billion euros from 19 billion last year. So if you knock off that cash, net cash position off the market cap, then you're looking at 23 billion euros. So for sort of 10 billion a year potentially in free cash flow, you're looking at sort of 2.25 times free cash flow, or potentially even 1.5 times net profit for the year. So that is pretty crazy. People not liking Stellantis, even though the numbers have come up. Let me know if you think there's other sort of reasons for these numbers still being so low. I can understand sort of the Volkswagen Group numbers being sort of a lot lower because of the debt, but having so much cash on board and sort of the electric vehicle side now pushing on, I don't see any reason for sort of some multiple expansion not to happen now. Finally, I just thought I would compare to Tesla. So 135,000 fully battery electric vehicles for the first half. And if you look at sort of quarter 1 and 2 for Tesla, they've got 564,000. So looking at 4 times the electric vehicle sales for sort of just over 20 times the market cap. Obviously they're higher margin and sort of higher priced in general vehicles, and a lot of people would say sort of maybe nicer vehicles as well, but yeah, I still see that as sort of very positive. Not potentially the growth that they have been seeing. Last year they grew sort of getting on for 100%, 90%, but they had been sort of growing at about 50%, and they could be looking at sort of 50%, maybe even a bit less this year, depending on sort of chip shortages and factory shutdowns and that sort of thing. So Stellantis are growing 50% and Tesla are growing less than 50%, then this sort of low market cap, low PE does seem a little bit off, but we'll see. I'm still sort of hoping for a little bit of a pullback and sort of add to my position. So let me know your thoughts in comments below, and like and subscribe. See you soon.